Oliver Slopes with Blue Line Futures and was a part of that Pro Farmer crop tour last week. What'd you see?
We saw a lot of good corn and soybeans, which was widely covered, throughout last week. And I think all in all, though, it was, halfway encouraging for corn to see the yield come in under what the USDA had it pegged in. I think that offers a little bit of a silver lining there on the fundamental side. And then on top of that, we've seen the demand side of corn really be strong as well. So we're a little bit weaker to start this week's trade, but all in all, I think that corn may have be a little bit closer to a near-term equilibrium. When maybe we get the September contract into delivery, we can start to carve out a little bit of a near-term low. Beans, on the other hand, that was quite a bit more bearish in terms of what the Pro Farmer came out with. They had the yield right around 54.9 bushels per acre compared to the USDA's 53.2. So a little bit of a shock there, and that may be why we opened up quite a bit lower in the Sunday night trade. But I tell you what, if you're looking for silver lining, soybeans is really where it's at. We've worked our way back near unchanged and even traded into positive territory by a tick or two this morning, which is nice to see. We have had a string of flash sales last week. It'd be great to see that pick up again here this week. We didn't see anything this morning, but still 4 days left to get some of those across the newswire.
Okay, so mentioned on the wheat side, and our focus has really been on corn and soybeans, at least the last few weeks. But looking at wheat, Kansas City's been moving higher, but Chicago moving lower. And I know in your post this morning, you actually talked about it being an oversold territory. What's happening with Chicago wheat?
Well, Chicago had a big breakdown late last week, and that kind of really spurred some additional technical selling that took us below that psychologically significant $5 level. Now, the market is, trying to stabilize a little bit here this morning, but I think there are a couple caution flags out there, especially when you look at the U.S. dollar making multi-month lows. Typically, the correlation with the grain markets is that's a tailwind when the dollar is making lows, and especially a tailwind for the wheat market. And the fact that we really can't get anything going here is a caution flag. Seasonally, this is still a weak time for the wheat market, but once we turn the calendar into September, that's often when we start to see some of these markets start to attempt to carve out a near-term low. So again, we got the September contract going in the first notice day for corn, beans, and wheat this week. Hopefully we get that behind us, turn the calendar over September, and we can have a little bit more positive price action to talk about.
All right, let's come back, talk livestock futures with Oliver Slope. We're back as Market Day Report continues after this. And then the hog trade, is it following? Well, it is on the 2024 contracts. Front month up a couple of pennies at 80.57. December 15 higher at 70.90. So is the cattle on feed report some of the stimulus for the markets this week? Oliver Slope's back. Oliver, what are you watching?
Well, that cattle on feed report was a big one Friday afternoon. Some people painted it with a little bit of a bearish tilt, which I can definitely see, but largely it was in line with analyst expectations pretty much across the board. So I think the market traded it initially for about these 45 seconds this morning. We opened, traded sharply lower, but buyers were ready, willing, and able to step into the market, which is really what you want to see after such a sharp sell-off, where you do get a little bit of a negative headline, then you see buyers step in on the pullback. And I think that could bode well for additional relief from these levels after just a tremendous haircut over the last several weeks. You had mentioned that feeder cattle contract that October. I really think that we can probably get additional relief towards 240 to 242. There's a 20-day moving average up there, as well as trend line resistance. And when you look at how the funds are positioned, they were net sellers again last week, and their net short was at 3,800 contracts, which doesn't seem like a lot, but it is for the feeder cattle market. That's the largest net short since we saw back in January. So they're maybe a little bit overextended on the short side, and we couldn't break down on a bearish report. So seeing some of that get covered here this morning to start this week's trade.
And I'm looking at the smile on your face. That must mean you slept in your bed at least a couple of nights since the crop tours. So welcome back home, and thanks for stopping by. Oliver Slopes with Blue Line Futures. And